Okay, so I'm Trisha with Easy E-mini Trade, and the information that you're going to get today is on the tools for order flow and market profile from Trade Order Flow. And Maria Russos is the owner of that company, and I'm just a fan of the tools, and it's helped my trading immensely. I've been using for about a year now, actually, I guess a little over a year now, and so I just think that everyone can benefit from the incorporation of using the order flow and the value areas with whatever setups you're currently trading. So that's my opinion. So I'm going to show you how Maria teaches us to trade it, and then I'll kind of tell you how I trade using it. And that's the beauty of the tools and the methodology, is that you can adapt it any way that you like. You can use candlestick patterns, you can use any setup that you currently use, you can use breakouts, breakdowns. So I'll give you a little information on how you can do that today. So hopefully you've all read the disclosure. Don't trade with money you can't afford to lose. It's that simple. Okay? So today, going over how you can trade using order flow and value areas. If you have any questions, we'll hold them toward the end. If you want to type in any questions, Maria is in the house and she'll answer them via the keyboard. And then when we're finished, we'll be able to take more questions, and Maria can use the mic to answer those questions for you. All right, and if you wanted to check out her tools, they're at tradeorderflow.com. And her email is tradetheeminis@gmail.com, and you can always, of course, send me an email and I can forward it on to her. All right, so a lot of this is the same information that you've seen. You know, market profile is market profile. But I'm going to show you some examples from yesterday, and then I'm going to attempt to play the market replay in Ninja, and hopefully it'll work. I had trouble earlier messing around with it while running GoToWebinar, so hopefully that'll work, just so you can see how the order flow bars actually work in the way the orders are coming in, because it's really hard to look at a static chart and get the gist of it. Okay, so a market profile, what is it? A market profile is a vertical graphic that displays price and time, and this will allow you at a glance to see the price levels that have the most concentrated volume, where most interest has occurred in either the way of buyers or sellers. And with the tools that I'm using from Maria, the market profile can be based on VWAP, which is volume weighted average price, a TPO, which is time price opportunity, or volume. I like the VWAP. Some people like the TPO. The choice is always yours. If you're not familiar or want a lot more information on market profile, you know, it's a very thick subject, if you will, and you know, you can do a whole series on just market profile. So if you want more information, you can go to CME site, cmegroup.com, and you can just do a search for market profile, and actually a tutorial will come up that you can actually look at. I don't have a chart up, not looking at charts yet, Brian. Just, can you see my screen? You should be able to see my screen. Yep, okay, because I'm looking at the, yep, you guys can see what I've got up there. So if you want more information on market profile, go there. You can look at the tutorial. He does have a book out. It's a little hard to get through. I liked Mind Over Markets by James Dalton better. And I actually found, when I did a Google search, I was actually able to find it in ebook form and got it for free. So you can do the same. So I'm going to just show you what a market profile chart looks like. Let's get the right chart here. So this is usually what people think of when they see a market profile chart. Just ignore these letters because this will be on charts that I'm going to show you later. So you'll notice here, this starts on Sunday, Monday, Tuesday, and Wednesday's not on here yet. And then this is the week at a glance, up to date. Yes, it's being recorded. And So you can see how all these little peaks are here. So that's where you've had a lot of volume, all these little peaks. Now if you stretch this out, each of those is going to be assigned a letter. Each time period will be assigned a letter, and they just accumulate at the different price levels. So I'm just trying to make this really big so you can see once it becomes letters. If it'll go here, come on. It's going to make a liar out of me here. Come on, there we go. So it's hard to see here, but you can see in this spot here, you've got letters assigned to the different price levels. And I've got a 60-minute chart up here, but if you, let's say each period that you're using is a half hour. So for each half hour, it's going to assign a different letter. So if the half hour of M was plotted on here, you can see everywhere that it was here at each different price level, you can see the letter M, and that's where during that time period, so let's say it was a half hour or an hour, so this is going to be an hour. So for that whole hour, this is the price range for that M hour. Then you can see here we've got N next to that. So everywhere that price traded in that second hour was assigned an N, etc., etc. So each time period is assigned a letter, and then it's put at the price levels that it traded during that time period. Now here, like I said, this is a little bit more concentrated because this is the whole week. But looking at that at a glance, you can see pretty much where you've got a high concentration in volume. So if you were looking at this on a daily chart or a 60-minute chart, and you were looking at price on a regular price chart, you would see that you probably had some support in this area right here, some support in this area right here, anywhere where you've got those big volume spikes coming out there. So at a glance, you can see where you've got the majority of the volume at these different areas. Now this, to me, is a little hard to look at. This doesn't do me much good for trading off of, but I know people do it. I'm not able to personally, but if you wanted to cheat and find support resistance, that's a really great way to cheat. Now I'm going to show you other ways that you'll be able to find support and resistance as well using the market profile chart that we use, or the VWAP chart. So this is what everybody thinks of when they think of a market profile. Okay? Now, if you're not familiar with value areas, while looking at that market profile chart, the fair value area is considered or comprised of 70%, where 70% of the trades took place. And that's for the day or whatever time period you're using. So where 70% of the total trades took place, that's going to be considered fair value. And when you have prices trading above that fair value area, then price is considered to be above value. And prices below the fair value area are considered to be below value. So if you were, let's say, the standard way that most people will teach you how to trade the value areas or market profile chart is you're always looking, or they're telling you to always look for shorting the top and find your way back into the fair value. Buy the bottom and find your way back into fair value. And we can trade that way. I personally have to have a few criteria before I'm willing to do that. But most of the information that you're going to get out there, that's what they're telling you to do, because they're considering it's a good deal. Hey, you're shorting it at the top, that's a great deal. If you're buying it at the bottom, hey, that's a great deal. You're buying it below the actual value. And right in the middle of the fair value area, you'll have the point of control. And you also have a high value area and a low value area. And what you're going to find is that price will trade to the high and low value areas. And a lot of times it'll be all within the same trading day. So you'll find it go to the low value area, back up to the high value area, back down to the low value area, up to the high value area. And you're going to see examples of this. And what you'll find will happen is that price is very often going to try to find its way back into that fair value area, the area where 70% of the trades took place. And it's also going to try to find its way back to that point of control. And the point of control is going to run smack dab in the middle of that fair value area. And if price trades outside and above or outside and below the fair value area, or even the high value area or low value area, it's always going to try to find its way back, as I just mentioned. So I'm going to show you what I mean here. All right, so this is my VWAP chart. And I'm just going to scroll back here to the beginning. So this is today. So let's go to the morning here. I'll just show you what you're looking at here. The name of the book was Mind Over Markets, Dennis. All right, so what we're looking at here, the yellow area is the fair value area. And this is today, this is this morning. So the yellow area is the fair value area. And when it comes into this blue area right here, this is considered the low value area. And then this would be the second low value area, the edge of the blue here. And then on the top side, you've got the high value area at the top side of the yellow. And then you've got the second high value area, the top side of the blue area. The purple line here is the point of control. And like I said, that's going to run smack dab in the middle of the fair value area. We also have on here previous day's value areas. So this red dot line that you see, that would be an area from yesterday. The blue dot area would be an area from yesterday. And then the rest are going to be above us. The green dots here are the point of control from the previous day. And we also have another high value area, low value area. So this is giving us lots of information. And what you'll find is that those areas will often hold the next day. So I find it helpful to know where they're at. Now I also have two moving averages on here. I have a 90 EMA and a 200 EMA, and I just find those helpful for using for support or resistance, or I'll sometimes short off of those or buy off of those. I don't look for a cross or anything like that. I'm not using it in that manner. They just are higher number moving averages that often hold. So, and this is a stochastic. Before you ask me, this is just a plain old stochastic. And I'm just drawing the K line, and the settings that I use on that are 14 and 3. And I like divergence. I like to always look for divergence, and I'll show you what I mean here in a little while. So what we're looking to do in the way that we're trading it is we're looking for breaks of the low value area here, or here, or here, or here. So we're always looking for breaks. So technically, if I had sellers stepping up on the order flow, now granted, this is pretty early. This is 9:33. I typically don't jump in something so early, but you could place a sell order just under this low value area as long as order flow is confirming that you've got sellers stepping in. Now, A lot of people will also buy this area. Now, I won't buy it right off the bat, but if I have divergence on the bounce, then I'll be happy to buy it. And the reason why a lot of people don't like to mess with like buying the bounce here, or even, you know, the pullback off the top here, is that price can get stuck. If you notice during the day, price is in this yellow area, that's usually where we're going to wind up with a lot of choppy, whippy type of price action, and often, you know, not get a lot of follow through. Not saying you can't take trades there. I'll take trades in there. I have a few setups that I trade of my own, and then I just use the market profile and order flow in conjunction with my setups that I like. That doesn't mean that's all I can do. I can take a trade here when it breaks. I can take a trade here when it breaks. So I'm looking for all those breaks. So here, 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 here. So every time it gets there, I can take a short. I can put a standing order there, waiting for it to retrace back up there. But obviously, I don't know that it's going to hold there unless my order flow is saying so. So when it breaks through here, I'm not looking for a buy, but I would be looking for a short if I had sellers stepping up on the order flow. And I'm going to show you the order flow in just a second. So what we're looking to do is we're looking to take the breaks of these areas. What's my shortcut on that? Control left 11, okay. Here. Here. So every time it trades back there, you can take the short. Now, we can trade the bottom of the profile, and the bottom of the profile is right here where it breaks outside this low value area. So this is low value area 1 when it first comes out of the yellow, and then when it comes out of the blue, that's the second low value area. So we can trade a break of that as well, as long as we've got sellers. Now, you can see that when we broke outside the low value area here, that's the end of the profile. We don't have any more information below. So very often people will buy the bottom of the profile, but let's face it, we don't know that it's the bottom of the profile until after the fact. So I will buy the bottom if I've got divergence to the upside. So that's where using a stochastic comes in handy. So you can see here on price, I've got lower lows on price here than here, while on my stochastic, I've got higher lows here than here. So that's divergence. So that would be an instance when I would be willing to try buying the bottom. And what you're going to look for if you're going to try to buy the bottom is you're going to make darn sure that you've got buyers stepping up on the order flow, not sellers. So that's what we're looking to do. We're looking to buy and sell those areas. And I'll show you some examples here in just a little while. How this is also helpful is if once you have a trend, a strong trend going on, and today was a little bit choppy on the NQ, but price is moving here, it retraces back up to that low value area. So that's a pullback. You can short off that area. You can short once it breaks the low value area here again. You can short once it breaks the low value area here again. So it moves lower, retraces. You can short on the retrace. Trades lower. Now this I would be a little cautious on because now we have a higher low here than here, so the chances are that you're going to get a little bit bigger retracement. So you probably wouldn't be interested in trying to short off that low value area again, unless of course you had sellers stepping up. But once it broke down here again, then you would be more likely to be interested, and I'll show you why. Because once again, for divergence, love divergence. So here we got higher highs in price. Well, here we've got lower highs here than here. So we're due for a pullback. So if you shorted that, you might get stuck down here at this low value area, but obviously you can see it keeps going. And then you'd be looking for a pullback. Once it's going, you're looking for a pullback back to that low value area. So when you have a strong trend going on, you're going to find that price is going to stay outside the value areas and then trade back to them. All right, so let me just put this back over here and I'll bring that up, and I've got lots of examples to show you. So that is the VWAP chart that we use, and the use of those value areas from the market profile that I just showed you in conjunction with order flow are very effective, because if you're looking to short, you want to see the sellers stepping up. If you're looking to buy, you want to see the buyers stepping up. So the market profile tells us where those high probability levels are, those value areas that price is either going to hold or trade back to, and order flow is going to tell us who's in control, the buyers or the sellers. So this is going to hopefully help us to determine whether price is going to hold or break through those areas. So in looking at the order flow, this is what you're looking at. Now this of course is the end of the day, so we're not going to get very much movement here, but I've got examples marked from yesterday, and then I'm going to try to play the market replay. No, it's just a stochastic, Woody, just a plain old stochastic. So here we're looking at the way I like to look at it. So I like to look at the bid-ask ladder. We have many options. I can choose to look at it as bid times ask. I can choose to look at it as a bid-ask histogram. I can choose to look at it with just the delta. Now the delta, if you're not familiar with that, is the difference between the number of buy orders and sell orders that you have. So let me go back to how I like to look at it. So this is telling me the number of buy orders at this level, and this is telling me the sell orders. Buy is on the right, sell is on the left. It's just like your dome, and you're going to look at it on a diagonal, just like your dome. You've got that tick spread, and just like when you look at it on your dome is going to have the difference between the bid and the ask is going to be a tick. So it's the same thing here. So if you're comparing here, for example, you're going to see 19 sells to 15 buys, 10 sells to 4 buys, 17 to 4, 9 to 16, 55 to 3. So that's how we're looking at the order flow there. Now you'll notice on this chart here, we've got some lines here. This actually is going to also mark those same high value areas and low value areas on this chart. So you could actually use this chart and trade off of it if you like. This red that you see here are swing lows, and it will also mark swing highs. So you could trade the breaks of those if you wanted to. Over here on the left, you're going to notice the volume at the different price levels. And so that is really helpful. I'm just going to scrunch it up so you can see it a little more. I'm just going to go back to where we had maybe some more volume here. Here we go. So here you can see we have a lot of volume in these price levels here, and a lot of volume in these price levels here, and a lot of volume here at this area here. And you can see, let me just make this a little bigger. This would be one of the low value areas, and this would be the point of control, POC. So the reason why we like to have the volume on here is when we take a trade, if we're taking a trade, let's say in this area right here where we've got this high volume, and what this means is this is where we've got a lot of congestion. We're going to get stuck there probably, and it's going to hold support, hold resistance, hold support, hold resistance. But right here where we've got this spike coming out here, you'll notice that there's not really a whole lot of volume in any of these price levels down to this area here at 64, 65. So if we happen to get a short somewhere in this area here under this high volume area, the chances are good that this would be sucked all the way down to the next high volume area. No, these are fills. These are fills, not orders. It's not like you're looking at your dome, Rich. So these are actual filled orders. So also on here, you'll notice that you've got the ability to plot. You'll see this 200%. Today it was all over the place. So here you see 161.8, 150. So you can put the fib lines on there. I don't like them on there, so I don't use them, but a lot of people do. So what we're looking for is when we're looking at taking a short, let's say a buy, as we're coming down to this high value area, let's say. So let's say we want to buy the bounce off this high value area. See this green? This is the same thing that we were just looking at on the VWAP chart. So I would want to see buyers stepping up there if I was going to try to take a buy as a bounce on that. And you can see here that looking at the delta is telling us that we have minus 267. So what that's telling us is that on this 5-minute bar, this is a 5-minute chart, on this 5-minute bar we had 267 more sell than buys. Now, just looking at that is not always enough, because let's say that this started out maybe at minus, let's just use a crazy number, minus 800. And this is for Ninja, yeah. So let's say this was minus 800 when this bar started, and it's trading down, 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 but as it's coming down to that low value area, this delta is decreasing. You could still buy it. Even though it's negative, it's all about where it's coming from. So if you had, like I said, it was decreasing as it was coming to support and you see the buyers stepping up, you could still, go ahead and buy that. Ideally, it would be, in my opinion, I'm looking to see that I have buyers actually there before I try to buy that off of that. If I was breaking out above right here on this high value area here, I'd want to see buyers. So you can see in looking at this back here, let me just get it so you can see it. Right here, you can see as we're breaking above that, we're showing sellers here. So I wouldn't be interested in trying to buy that until I had buyers, not sellers. So you can see here it tries to break through, pulls right back. Here doesn't break through. Here it breaks through and we actually have buyers stepping up. So you can go ahead and buy the break of that. So we're always looking for the delta. That's the simplest way to do it. And you have the ability to put whatever you want down here. I just have the delta volume and cumulative volume. I find that easiest for me to look at. I like the delta to be the first thing. You can put the bid and ask there. You can put cumulative delta. You can put whatever you like there. So we're always looking at the orders as they're coming in. Now, what's also helpful is seeing where you have a lot of interest. So this is this is around 2 o'clock. Was that 2:20, I guess? So here you can see in this price level here, we have more interest by the sellers than the buyers. You can see that we've got larger numbers over here than over here. So let's say that you were thinking that you were going to take a buy somewhere over here, and you're looking at the delta, and at the time it was green, let's say. In comparison to the sell orders, there's really not a whole lot of interest here on the buy side. So you might want to hold off until you see those numbers increase. Do you see what I'm talking about there? So you can see you got more interest over here, for example, on the sell side than the buy side. Then here you get some more interest in the buys here on the sells. And this is, obviously a lot different when you're looking at it real time because it's dynamic. These are moving pretty fast. And a lot of times when you have a lot of volume coming in, like first thing in the morning, it's hard to look at the actual orders coming in on this bar. So it's easier just to look at the delta. So you have some options on here, and at just a click I can put on here what I want to look at. I can put the grid lines on here. I can put unfinished business. Now I'd like to know where that is, and what unfinished business means is right here you see this red circle here. And notice on these bars, so here you can see 199 and 0. Up at the top, 0 and 3. Here, 0, 17. Down here, 4, 0. So these are typically going to zero themselves out on each bar. Here you can see it didn't zero itself out. You have 18 and 4. So this 4 here, this never finished its business. And so what that means to us is that price is probably going to come back and close that out. And you can see on the very next bar it did. If you have a really strong trend, it might take a while for it to come back and finish its business. But if you have a market that's not really got a strong trend, it will usually come back and finish its business within a few bars. Now, I use a 5-minute chart, and I'll show you here in just a second why. Oops, where'd that go? I'm just going to put this here for a second, bring those back up here. I'm going to put both charts here so you can see side by side. So where's my 5-minute? Make that smaller. And then let me get that 8 range again. Okay, there we go. So this is the 8 range that we were just looking at as the VWAP chart. It's just that the price today finished way outside the value area. You can see we've got our high value area here, and then it's huge. The range is huge on that. You can see down here at like 45.11 all the way up to 45.27. So that's pretty big from this first high value area up to the second high value area. So let's say that price was still trading this time of day. I know it is trading, but not much is going on, obviously. Then you'll likely be looking for pullbacks to that area. All right, so let me get to my examples here. So I think I marked them from yesterday. Where are we? Because I did this yesterday, so that's why I used yesterday's. All right, oops. Okay, there we go. So what time is that? Like 10:05 from yesterday. So let me just scroll back here. And then, like I said, I'm going to try to do market replay so you can see what the bars look like as they're actually forming. So 10 o'clock yesterday. All right. Hey, Maria, you answering those questions via the keyboard? Okay, so here you can see the yellow area is the fair value area, and over here I've got the order flow chart. And so what we would be looking for is we'd be looking for a break under this low value area. Now I'll usually use a sell stop or a buy stop. So what I would be looking for is I would want to see sellers stepping up. Now granted, this is static, but you can see here I've got a negative delta. So I could go ahead and short that, but still you do want to watch and see how the orders are coming in. We have what's called an action bar, and I'll show you what that is. It's more aggressive orders coming in. So you can see as price is forming whether you've got more green coming in or more red coming in. The darker the color here on the delta, the more sellers you have coming in and stepping up. So here you can see that same low value area right here where this reddish ribbon is. That's right here. So you could short there. You have sellers, depending on what your stop is. I think if it was a 3-point stop, it held. So you're kind of sweating that out. Now, you can still watch the price bars, and if you see that there aren't any sellers stepping up, you see buyers stepping up, you can go ahead and exit the trade, or obviously you can let your stop get hit. But once it doesn't trade through this area very well, and then it bounces, and then it attempts again, then you might probably just flatten or just take a small profit. I think that worked out for over 3 points, but here's what I'll show you. And again, I love divergence. So if I was seeing that in this area here, I would be trying to buy this coming back into this yellow area as long as I had buys coming in. And you can see here, in looking at the delta, I do have a positive delta here, which means more buy orders than sell orders, but you can see it is pretty small there. It is a pretty small number. And you like to see them, obviously, if it's like a 20, let's say, 20 to the positive delta, and I'm just making that number up, then still questionable whether it's going to be enough to push this through. But even though this is a low number here, let's say that it started out at like, minus 700, and now it's 77, as you were thinking that you were going to try to buy this coming back into this fair value area. So if it started out with a really large negative number and you see it decreasing, 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 then obviously that's still buyers stepping up. So you could buy that bounce into that fair value area there. And you'll notice it retraces back up to that 90. And like I said, I like the 90s and the 200 EMA. So once I'm up there, I could decide that I want to short from up there. That would be a personal choice. And as long as you have sellers stepping up, you could go ahead and do that. Here, coming down to this low value area. Now, obviously, we've been sitting here watching this not be able to break down. So you don't want to trade stupid. And what I mean is, if you know that you've got an area that keeps holding, don't keep trying it if it's not breaking through. Just wait for it to break through. So what I would do for myself is I would draw this line here, and I would wait to get a close below this line and look for sellers stepping up. That works so great with order flow as your confirmation. I didn't take many breakouts or breakdowns before I had order flow, and now that's one of my main setups that I trade now. So, questionable whether you would try C again. Why? Because, it couldn't break down before. So if you tried C, you did have sells, mainly a negative delta here at minus 111. So if you wanted to try to short and you took it, then you got stopped out. Again, what did this number start at? Was it like positive, 800 or negative 500, and now it's down to 111. So if you see this number decreasing, even though you've got negative delta, and it's getting smaller and smaller and smaller, you're going to be cautious about taking that short. Now, I will generally on the NQ, Maria likes a 5-point stop, and I'll use a 3-point stop. And, it works for me because I don't mind trying to get in again. But, let's say that you were here and you did take the short, and then you saw a bunch of buyers stepping up. You could just get out and not wait for your stop to get hit. Now, obviously, we have days where price is whipping back and forth, where we're pretty much, like today, this morning, it was, move down 3 points, move back up 3 points, move down 3 points. It was just all over the place first thing this morning. So on those types of days, you might use a bigger target and a bigger stop, or a smaller stop with a smaller target, because it'll be easier to hit your target, obviously. So here at D, you can see this. Now we're in fair value, and a lot of people will stay away from that, but you can see here, this is pretty wide area. So I'm not willing to pass up on every trade that happens in there, because that would mean, pretty much, from 43 to 60, I'm going to sit on my hands. I'm not going to do that. So as long as you know where the levels are, where price can get stuck, or use those areas as a target, take the trades. So the purple line here is the point of control. Now I will say I generally will stay away from the point of control. So like I won't take a buy as price is breaking the point of control, or I won't take a short as it's breaking the point of control, because a lot of times it'll just kind of meander back and forth in that area. But the red dots here where I have D marked, that actually is a break of a value area from yesterday. So as long as I've got buyers coming in, I can go ahead and take that. So you can see this is the bar that was forming at that time. And chances are, as this was happening up here, price was moving higher and higher into that point of control. And you do have a positive delta here, but now in the next bar, you can see that it actually increases here a little bit. And so what's the price level on that? Let me just see what that is, and I'll tell you exactly where the entry was on that. So that is at 53.50. Let's see it over here. 53.50. So right there. Right there. So you can see as it's breaking that area right there that we've got more interest on the buy side. So we do have a positive delta. We had a positive delta over here, and as it's breaking that area in real time, you would have seen the buyers stepping up here and these numbers getting bigger. So you could go ahead and buy that. And then the hope would be that you could find your way back up to the high value area. Now what you'll find when looking at this VWAP chart, now like I said, I'm choosing to look at it as a VWAP chart. You have the option to look at it as TPO or volume as well. So TPO looks good as well. You're going to find that whatever you're looking at it on, those levels are going to hold because it's using, the formula based on that type of chart that you're looking at. So this is, like I said, VWAP. And what you're going to find, as I mentioned earlier, is that price will go from one edge of the fair value area and eventually make its way down to the low value area here. And then it will find its way eventually back up to that high value area again. Now, obviously you don't know when that's going to happen, but usually it'll cycle back and forth, even when there's a nice trend. Here you can see that this value area is pretty flat. You can just see it's sideways. Looking at the lines here, they're pretty flat. So pretty much that's telling you that you're in pretty much a ranged type of day until it breaks out above or breaks down below. Just like if you're looking at it on a 60-minute chart or a 15-minute chart, whatever chart you like to look at to get a clearer view of the broader market. I always am looking at higher time frames. Now you'll notice here I have an 8-range chart for the value areas on my VWAP chart, but a 5-minute chart for the order flow. There's no right or wrong chart to look at. You can look at them both as 8 ranges. You can look at them as a time-based chart, both of them. On the VWAP chart, it doesn't matter, and it doesn't matter on the 5-minute chart. It doesn't matter what you're looking at it as, because we're looking mainly at the orders coming in on the order flow, and we're looking at the levels on the 8 range. So if you're looking at it on a 4 range, 8 range, 12 range, a tick chart, it doesn't matter what you're looking at it because you're looking still for those same breaks. It's going to be the same. Those levels are going to be the same no matter what type or size chart you put this on. And this works well. When I first started, I used an 8 range as my order flow. And it was too fast, because the delta was just moving too quickly. Like it would be 20, let's just say 24 plus, and then the next bar 8 ticks later, plus 25, and then minus 25. So it was just too quick. They just formed too quick, especially in the morning. Whereas a 5-minute chart works well because you're basically using the 5-minute chart as your bias. on each of these bars because you're looking at the delta on a 5-minute chart. So it's allowing you to have a bias based on that 5-minute chart. And you can use a 15-minute chart if you'd rather have your bias based on a 15-minute chart. But 5 works really well. And I've tried many different types of charts, and that works well. And then I always like to trade off a range chart. Michael's saying, what does the 8-bar indicate for you? Well, this is just a range chart, Michael. So each bar here represents 2 points in price. You can make it a 12, you can make it a 16, you can make it a 4, you can make it whatever you want. Because like I was saying, it doesn't matter what size bars you have on here because we're mainly interested in the levels. So the bigger the chart, the less whipping around you're going to get. Okay? All right, so we talked about D. So then the next area I would be looking for, now I could take the break of this previous day's value area, see this red line here, but it's right into that point of control, the 200, the 90, so I'm going to pass on that. No matter if I have sellers or not, I'm going to pass on that because the likelihood is that I'm going to get stuck there. And like I said, don't trade, and I know that might sound a little bit mean to say don't trade stupid, but don't trade stupid. Just look to the left here. Always look to the left, even if it's on a bigger chart. So when I look to the left here and I'm looking at the areas that held, the last area that held up here is right here. Can you see that right there? So the chances are pretty good that it's probably going to hold as support on the way down, right? So I have the information here that, okay, yeah, we had resistance back here. It's probably going to hold as support. And that's right in the area of the POC, the 200, and the 90. So why not wait to get through that, get through this junk right here, right? So what I could do is I could then wait for a breakdown under this area here as it's consolidating. Now, granted, it's still in an awkward spot, but right here, when I break, I get closed below this line here. Now, I'll take this off a 4 range for breakdowns, so I've got a lot more room and I'll likely get in earlier. But when it breaks down below this area here, as long as I've got sellers stepping up, I know the chances are pretty good that I'm probably going to find my way back down to this low value area. So I can go ahead and short that. Now, I'm not going to lose sight of the fact that we've got this congestion right here. So in my mind, I would be saying, okay, well, I've got enough room to take that trade. I've got some support right in this area here. So do I have enough room to be profitable if I get stuck there and it can't find its way down to the to that low value area? And the answer is yes. So I can go ahead and take that, and then I get to where I want to get. It gets down to that low value area. Now we know that we've got this congestion over here where it kept holding. So I can do one of two things. I can go ahead and try to short the break right here if I have sellers right there. And you can see I have buyers here. It's actually a small number. So chances are this started out as a pretty high number and it kept decreasing. So like I said, you could go ahead and short right here. Let me mark it right there because you've got sellers. Or if you want to be safe, if you decide there's not enough room down to this area that was holding as support, then you can look for a breakdown under that area, which would be right here where I've got E marked. And I've got sellers. Look at my delta. It's a negative 446. So I could go ahead and short that right there. And then I know I've got my next low value area down here. So the neat thing about using the value areas is that if you know the levels where it's probably going to trade to, either above you or below you, then you have a better, easier time holding on to your trade for a little bit longer. So if you knew that you got through this area here then you could use this as your target area. And so once you see it not breaking this area here and you see buyers step up, then you can go ahead and tighten your stop. These letters I marked on here, these are by hand, Rodney. And this was just so I can compare the bars over here to the bars over here. So those I put on there myself, okay? So yeah, so those I put on there. So where is F? Now remember I said I won't buy into right into that fair value area. So this one I would probably pass on. It worked out. You can see F here, we had a lot of buyers stepping in, but where I would be interested in it is at the low area here of that low value area. As long as I had buyers stepping up, I'd be interested in that bounce off of there because we know we're going sideways pretty much. So if I buy that, then worst case is that I get stuck on this pink line that I drew here because this is an area of support and resistance. And then if I can get through that, then I've got my low value area. And then if I can get through that, then the chances are good it's going to find its way back up to that POC or that 90 or 200. And I'm showing you ways that I'm trading this because I'm a little more on the cautious side. Maria will take every single one and not even blink, but I'm definitely more particular. So here we're breaking again the low value area right here. And now we know that it did manage to find its way down to the second low value area, and that's right at G. We've got sellers, sellers. So hey, we can go ahead and short right there and then look for that next low value area here to hit. So you're always looking for where is price have the possibility of getting to next. Here when we break this low value area, let me just stretch this out so you can see it a little bit. There we go. So we have H right here. So if somebody was going to try to buy that into that fair value area, we actually had sellers stepping up. So you're probably not going to try to buy that as it's coming back into the fair value area. But once it hits that and you have sellers stepping up, you could short that. You can put a sell order there and short it. And then you know again that the chances are good that you're going to find yourself down here at the low value area. You could short right here where I've got this letter I. And your stop holds, but you have to sweat this out a little bit. And you can short here at J as long as you've got sellers, and we do. So you could actually short in both of those areas. And here at K, when it takes out the low of the day here, you've got big sellers. You could short it there. When it breaks under this area here, this is a previous day value area, this blue dots, you could short it there as long as you've got sellers, and you do. Sellers step up right there, there. So let's see where K is. There's K, still sellers, big sellers. Here, still sellers. Now what I want to show you are a couple things real quick. The outline here on this BWAP chart, you can see the outline, this black outline, and this is cumulative volume. So this is not only today's volume showing up here, this is over, however many days you want to load on there. And so you can see these areas here. I'm going to just scroll over to the right so, oh, you actually can't. Let me just get all the way over. Here we go. So you can see where you had the concentrated volume there. And here. And here. So let's say that we had a short in this area here. and it was going to trade below 20, let's say, right there, chances would be good that it would probably be able to find its way down to that next high volume area, which is right here. So those little openings in those volume nodes are really, really helpful when you're taking, especially breakdowns and breakouts. Really, really helpful because it'll be sucked down or sucked up to the next high volume area. And so that's really helpful. The colors that you see here, that's today's value areas. The volume for today, the colored ones. All right, so we're kind of running out of time. I'm not sure I'm going to have time to do the chart replay. A couple of things I did want to show you as well are, let me just bring this over here real quick. This, I don't use these, but Maria likes them. She also has these things she calls chubby bars. And you'll notice here, they get fatter with that particular buyers or sellers coming in. So if it's red and they're fat, or chubby I should say, then you've got a lot of sellers stepping up. If they're getting skinnier, then you're decreasing. So if it's green and it's decreasing, you're decreasing the buyers. If it's getting fatter and it's green, then you're getting more buyers. So a lot of people are finding those helpful. So like here, when it's coming out of the value area and you can see that you're getting the bars are fatter, then that would just confirm that you've got more sell orders coming in. Buying off the bottom, you can see that you've got these bars getting fatter off the bottom, so in green, so you've got the buyers stepping up. So Maria likes those. The other thing that, this is crude by the way, the other thing that a lot of people are liking, and I'm not using these because I don't have any trouble picking out my own support and resistance areas using higher time frames, but these are, and we're going to do a drawing here in just a minute, you guys, but these X's are support and resistance areas based on higher time frames. So let's find where it's actually trading to those. Okay, so here's yesterday, I think. No, actually it's Monday. This is crude, as I mentioned. So here you can see this blue right here, these blue like crisscross lines here. So that's would be an area of resistance. And these are really crazy, deadly accurate. I'm really surprised. So you can see it trades up to that area of resistance in using these TOFX indicator that Maria is using. So you can see it trading up to the next area of resistance. And then you can see it's holding that area of support. And then it trades down. Where does it go to? Those blue lines again, down to the next area of support. So like I said, they're crazy accurate. So if you have trouble spotting or picking your own areas of support and resistance based on a higher time frame, then you might find those helpful. So I just want to and what I'll do is I'll do the market replay here in just a minute for anybody who wants to see it. I might have to stop the recording though because I might run out of time on that. But Maria's package includes these indicators: divergence delta, market profile plus, order flow chart, price action, and a VWAP market profile chart. And the reason I wound up with Maria's tools is because the training, and I know a lot of you have been looking at order flow, and very often you're actually leasing the product and not the owner of the product, or you have to pay a monthly lease. And then also you pay extra for training, or you get no training whatsoever. So that's why I opted for Maria's, because she gave 6 months training in her training room, and it's got long hours. She's there Monday to Friday, 4 a.m. to 11:30 Eastern. And so you'll get that with your package. Now, if you order by midnight, if you decide that you want the tools and you order by midnight on the 15th, then she'll give you $200 off the package, and then she'll give you those chubby bars at no charge. And just FYI, the training room is almost to capacity. So after the 1st of September, it's going to be by waiting list only. So what that means is that she won't be able to sell her tools until she has openings in the training room, because obviously she's not going to sell the tools if there's no way for you to get trained. So then it'll be on a first come first served basis as the spots come available. And if you have any questions, you can send Maria an email at tradetheeminis@gmail.com or go to Trade Order Flow. So let's see, who was Maria? Let's pick a number here. And the drawing today is for a free month in Maria's room, and that's a $399 value. It's trading and trading room. She trades in the room, but the sole main purpose is to train you on how to use the charts that I was just showing you and how to trade those areas. All right, so let's see, Maria. And for those of you who know me, I trade my own setups, and my favorite setup is the Slinky. And in trading that and incorporating it with the order flow has been really, really great. And actually, Maria's working on doing automated for Slinky with order flow. So we'll keep you abreast on how that works out. Yeah, you could trade anything you want with this. You can use the order flow and market profile on equities. You can use it on the forex. You can use it on anything that you want. Anything that you want. All right, so let's see. 1, 2, 3, 4. So Maria, give me a number between 1 and 160. Okay. Okay, so Maria picked 11, and the person who's going to get the free month is Christina. Christina A. So Christina, I'll make sure that we send you an email. So Christina won the month in the room. All right, so I'm going to try real quick to get the market profile chart to play here with market replay. And it's such a pain in the butt, but I'm going to see if we can get it to do it, just so you can see what the order flow looks like as it's happening real time. All right, so let's try this here. Let me disconnect AMP and then connect market replay. And then we'll take some questions too, but I just want you to see what it looks like. Excuse me. All right, so I'm going to put that guy right there. So let's go. Okay, so it's on 8:12. What time is it at? 12:45 a.m. All right, I'm just going to hit play, and then I'm going to I'll fast forward it. Yeah, CQG is who the data's with for me. It won't matter. I'm just going to make this play like 500 times faster here real quick so we can get through. I hesitate to skip ahead because just slide this over, because then sometimes it gets stuck. So I'm just going to see if we can just get through. I've got this playing 500 times faster, you guys, so just bear with me here. I just want to get it to like a normal time here. Let's see, I'll try sliding it, but sometimes I don't have any luck with that. So I'm just going to go, all right, that's 10 o'clock today, so we'll just see if it'll go there. Hey Kay, I like to trade the NQ and Russell and the YM, and then pre-market I like CL. All right, so I'm just going to speed this up just a little bit. Come on now. There we go. So I'm going, it's going fast. I'm doing it 3 times faster. And this is at 10 o'clock today on the, what do we got here, NQ. So here you can see as the orders are coming in, right here, here's the delta. And this is the action bar. This is more aggressive orders coming in, like market orders. And so what it'll do is once this fills up over here, it'll take these orders and put them over here. Each bar here is going to be 5 minutes. I put a countdown timer on mine just so I know when that 5-minute bar is almost finished. Because sometimes right when it's at the very end of that 5 minutes, you know a new bar is getting ready to start. And once a new bar starts, you know, let's say I have sellers on this bar and then it only has a couple seconds left, and then all of a sudden they get a new bar and it's, you know, buyers are in control. I want to know when this bar is going to finish. So you can see it here hanging out at the low value area. And here you can see on this action bar, and you don't have to look at this, I find it helpful, but you can see here that we've got a lot of buy orders coming in here. Even though this bar here that's forming at the same time, we've got a negative delta. So let's say that you wanted to take a short under this low value area, you want to see this number as a negative delta and getting bigger, not a negative delta and getting smaller. So here coming up to this level here, if this holds and you get sellers stepping up, you could short that. But you can see we've got the buyers stepping up, so we're not ready to try and short that yet. You can see that's increasing, not decreasing, right? So now this bar, you know, is getting ready to finish, so it's anybody's business, anybody's game here. So here you can see it's a small negative number. And also what's helpful is you can move your stops based on what levels you have interest, like where you have buyers that are interested or sellers interested. So if you're short, you're going to put your stop, you know, above an area where you don't have any buyers interested. And so you can see it's still holding here. So it hasn't quite rolled over yet. You can see this increasing though with sellers. So we'll see what happens. It's still bouncing there, but you can see how the orders come in. And it takes a little practice, but Market Replay is great for doing that, as well as you know, sim trading until you're used to it. And you know, it doesn't really take any time at all, but you have to put the time in, just like with everything else. And here you could see divergence to the downside here. You can see that. So I would be, whoops, I would be looking for the possibility of maybe something happening under that area if it got under here. And it's right before news, so I don't trade news, but so anyway, that's what it looks like as it's forming. And sometimes when we have a pretty volatile market, you could see this 5-minute bar is pretty huge. And we were kind of whipping around this morning, first thing, but it looked like the afternoon was pretty nice. I didn't trade this afternoon, but so once it comes down this area here, you're still looking for, you know, the break of that low value area, and you want sellers. And so you can see you've got sellers stepping up there, right there. Sellers, sellers, sellers. So how far it goes, that's the question. You can see you've got some old support right in this general area here. So you would determine, okay, if I get stuck there, do I have enough room? And so same thing here again. And you've got sellers, so the hope would be that you can get through this junk area here again. Now, even if you took, you know, either of these short, you still wind up with at least 3 points. If you shorted this, you got 3 points. Then if you re-shorted it here, you got at least 3 points. So that's what it looks like, you guys. And here you can see how the orders are coming in. The darker the green or the darker the red, the higher the number. All right, so I'm going to just stop this, and I'm going to just stop the recording. as well, and then we can take some questions.